What's up, everybody? This is Sunko, the Korean bro, and today is 2022, April 6th, and Wednesday night. Mm. And I'll be talking about stuff too. Last night, I finished my YouTube live early, earlier than usual, because I had to check something, um, which is about reading business. There's a financial statement and like cash flow, income statement, balance sheet, etc. And I forgot the ways to read uh those documents that I just talked about, and like I had to take some time to read the book and got hang of it because like reading balance sheet and like stuff like that are really important in terms of uh investing some of money into companies. So hmm, yeah, I spent money. I spent time reading a book last night, and today I'm back here, and I'll be talking about stock again. Let's see what's happening. Last night I was happy because I thought that we had a really positive trend, upside trend. But now things are not going great because trend is now a downward trend, and like it's negative. But I still have my hopes up because like fundamentally all the companies that I invested into are all good ones. Not a single one is bad. So let's look at the companies that I invested one by one. But before going through it, I'll read some articles first. Uh, okay. Remember those crypto Super Bowl ads? Why they still matter? Here comes the stock market correction strategies. Musk refused Twitter disclosure to show he's an active investor. Here comes the stock market correction strategies. Hmm. The labor shortage is nothing new for this industry. A Fed official speech tanked markets. Why it's worrying everyone. Two stocks under $10 that this insider is aggressively buying. U.S. stock futures point to second drop ahead of Fed minutes. Stock market news live updates. Stock future deep as investors digest hawkish Fed remarks. Eye more sanctions. Jim Cramer advises looking for tomorrow's winners among quarter first losers. Here are three stocks analysts like. Kathy Wood's ARK is worst performing U.S. equity fund in quarter first 2022 Morningstar. Wall Street set to fall on rate hike jitters, Fed minutes eyed. Here comes the stock market correction strategies. This cybersecurity stock is an easy pick for investors in tumultuous 2022. Apple and other growth stocks have sizzled. Why they are bound to fizzle now? Russian stocks shrug off new sanctions threat. Ruble firms past 90 versus euro. Dow future slide. Russia skirts net zero default after dollar bond payment blocked. First mover Asia Singapore wants more control over crypto companies that call it home but aren't there. Major cryptos drop. Hmm. Boeing taps Amazon, Microsoft, and Google for cloud mega deal. Stock market today. Dow Jones futures fall as rapid Fed shift hits market rally. Elon Musk steals Trump's thunder. U.S. government debt under pressure as traders await Fed minutes. Stock pops earnings topped estimates. Rivian production of electric trucks more than doubles. The stock is rising. Global bond sell-off. AMD is about as hot as it gets. Here's how they traded. Alibaba stock and JD.com are falling again. Three things weighing on Chinese tech. These income strategies can help protect your stock investments from inflation and recession. We're another Kathy Wood Part 2 insights from Sylvia Jablonski, the new CEO at Defense ETFs. The clean energy sector has turned bullish again. These are the 5 best tech stocks to watch now. Breakout: watch Microsoft, Apple among stocks in or nearby zones, but face market pressure. Is Nvidia stock a buy? Patent launches strength training product at 40% lower price. Those crypto Super Bowl ads. Fintech stocks look cheap. Why could be time to buy? Podcast: Dow Jones Futures. Will Smith backed venture capital firm. The key to surviving inflation is pricing power. These companies have it in spades. This is Warren Buffett's first rule about investing. Here's what to do if your financial advisor breaks that rule. Okay. Market beat. The trading volume is picking up on these three buys. Australia and India think quote for a new free trade deal. More Western sanctions to hit Russia after budget killings. If you're a bank merger, should you shop around or stay put? 3 insurance stocks worth dipping into during tough economic times. El Polo local stock is not a crazy long. 3 insurance stocks live update. 3 swing trades with go upside. Chevron is moving higher on analyst upgrades. 4 downtrodden EV stocks spotted deep. Germany as energy relations sour. Okay, let's go further. Here comes the stock market correction strategies. The markets could crumble under the weight of a series of rate hikes and nagging inflation well before the year ends. Warns the top strategies. I do expect a market correction later on this year related to numbers, said 22V research founder Dennis on Yahoo Finance Live. For now, this is something not fully internalized by investors. The Busher expects violently flat returns for markets. To the Busher's point, markets have largely ignored any risk to corporate profits from inflation and high rates. The S&P 500 closed as low as 4,170.7 this year. On March 8, as traders fretted about the aftershock of Russia's war on Ukraine, which including surging oil prices, but markets have since rallied hard. The S&P 500 is up 8% since those March 8 lows. Stocks across sectors have rebounded, and notably top tech names such as Meta and Amazon. And blah blah blah. A Fed official speech tanked markets while it's roaring everyone. The tech stocks and bond markets both sold off on Tuesday, blaming comments from Federal Reserve government in the Tuesday speech, Branner said it is of paramount importance to get inflation down and highlighted the urgency of tightening policy quickly. She also said the central bank will start to reduce the size of its balance sheet at a rapid pace as soon as May's meeting. 2 stocks under $10 that this insider is aggressively buying. Q Biopharma and TFF Pharmaceuticals. Okay. Oraplex Holdings, beauty sector, and Global E Online. For our second stop, we'll start with e-commerce, but with a twist. Global E is a tech company that facilitates international e-commerce. The company operates a platform designed to enable and accelerate cross-border direct-to-customer online commercial activity. Global E allows retailers and brands to streamline their customer shopping experience in more than 200 local markets. Let's go back here. Advice looking for tomorrow's winners among quarter first losers. Here are 3 stocks analysts like. With quarter first behind us, it's time to sit back and evaluate our situation. First off, the obvious. Volatility ran higher in the first quarter of the year, fueled by multiple conflicted headwinds. Those include inflation, which is still rising, a global supply chain plagued with snage, resurgence in COVID outbreaks flaring up around the world, Russia's war against Ukraine. That is both Europe's largest land conflict in 3 generations and a major disruptor of global food and oil markets. But is this the picture as grim as all that? Oil prices have pulled back somewhat from the peaks they hit shortly after the Russian assault on Ukraine. American consumers are starting to react to inflation by reducing purchase sizes. The first point may ease inflationary pressures, if only slightly. The second will not, but it might ease pressure on delivery changes and manufacturers scale back in response. It's tough to make predictions, especially about the future, as Yogi Berra put it, and he was right. But there may still be some light at the horizon. In the meantime, for investors, there may also be plenty of opportunity. CNBC's Jim Cramer has noticed the possibility of positive economic indicators, and that has him looking at the stocks which lost out big during quarter first market correction. If we get more signs that inflation is cooling on its own, like the pullback in oil, then some of the hardest hit stocks might end up looking pretty enticing. Blah blah blah, but no, skip on this one. Cathie Wood's ARK is worst performing U.S. equity fund in quarter first 2022, Morningstar. Market watchers were taken aback when Cathie Wood's flagship ARK Innovation Fund fell 24% in 2021. This year, the wildly popular ETF logged on even bigger loss in just the first quarter alone. According to financial analytics firm Morningstar, ARK Innovation was the worst performing U.S. equity fund in its universe of coverage during the first quarter of 2022. The exchange-traded fund registered a loss of 29.9% in the 3 months ended March 31st, dragged down by a sell-off in the high-growth technology stocks during the period. U.S. tech funds bore the brunt of declines last quarter at an average loss of 13.7%, the worst quarter since 2018 per Morningstar dates. ARK was dragged down by sharp losses in some of its biggest holdings. Here comes the stock market correction strategies. The markets could crumble. Okay. Here comes the next one. As ear Singapore wants more control over crypto companies. They call it home, but aren't there. Major cryptos drop. After hawkish remarks by Federal Reserve Governor Leo Burnett, Bitcoin and other major cryptos were off. Singapore tightens restrictions on crypto companies that register there but do not have a physical presence in the city-states. Bitcoin buyers could remain active on pullbacks into the Asia trading day. Boeing taps Amazon, Microsoft, and Google for a cloud mega deal. Is hiring the three biggest U.S. cloud computing companies. Microsoft offered to help with a digital makeover aimed at giving its airplane designers and software developers more tools. To help with a digital makeover aimed at giving its airplane designers and software developers more tools. The multi-year agreements are intended to upgrade the company's current system of hosting and maintaining software applications through a network of servers, which can be difficult to maintain. The Chicago-based manufacturer told employees Wednesday, Boeing plans to shift hundreds of applications to cloud, where they will be stored and maintained in tech giants' data centers. Boeing plans to shift hundreds of applications to the cloud, where they will be stored and maintained in the tech giants' data centers. The manufacturing titan is rebooting its technology to help address quality lapses and production gremlins that drive up cost of developing new aircraft. Mm. The airplane maker is investing in tools such as digital twins, virtual replicas of actual hardware to model both the performance of its new aircraft concepts and the assembly lines that would build them. These partnerships will strengthen our ability to test a system or an aircraft hundreds of times using digital twin technology before it is deployed. Post on LinkedIn, Boeing didn't disclose the financial terms of the new arrangement. The information had reported last year that Amazon Web Services, Google Cloud, and Microsoft Azure were competing for a contract worth more than $1 billion over the several years. Boeing is the latest big tech customer to split its business among multiple cloud providers, each issuing a centralized approach promoted by Amazon, the company which leads the cloud markets. Urges customers to go all in on AWS. Microsoft and Google, the number two and number three US based providers, advocate a multi cloud approach of the sort Boeing is taking. Okay. It's about as hot as it gets. Here's how to trade it. Long time surge, fave, advanced micro. This income strategy can help protect your stock investment from inflation and recession. There's always uncertainty in the stock market, but the deflationary cycle. There's always uncertainty in the stock market, but the deflationary cycle that helped feed tremendous gains over the past several decades has ended. Two related strategies can give you downside protection while still capturing most of the upside potential of stocks. Um, the two strategies: selecting stocks of companies that have been increasing their regular dividend payouts rapidly. These income strategies can help protect your stock investment from inflation and recession. Rising dividend income and downside protection help you meet your investment goals as interest rates rise. Uh, Selecting stocks of companies that have been increasing their regular dividend payouts rapidly, augmenting that dividend income through the use of covered call options. Dividend growth, that's the secret. That is true hedges against inflation. With inflation at its highest point in decades, investors may be in for a year-long cycle of rising interest rates and other policy tightening by the Federal Reserve, with other challenges to companies, including supply shortages and increasing labor costs. The smooth path of rising profits will be challenged, which can lead to more volatility for stocks. Selecting stocks for rising dividend income. Simpson emphasized that his main strategy is selecting blue chip companies that he and his colleagues expect to continue raising dividends rapidly. The companies are screened for quality management, track record, earnings and cash flow growth, and returns on equity. Simpson called dividend growth the true hedge against inflation. For many investors, high inflation is a new phenomenon. We're at an early stage of the counter cycle of rising interest rates that can create a difficult environment for the broader stock market. Despite having income in its name, Devo's objective is to provide a total return competitive with the broader stock market, with lower volatility and an attractive monthly dividend. The annual yield is 4.8% according to FactSet. Simpson said the Dow Jones Industrial Average DJI is a fair benchmark for Devo's performance. Hmm. Dividend growth strategy that uses covered calls to harvest volatility. Writing covered calls. To watch now, what are the five best tech companies? It was a tough start to the year for many of the best tech stocks, hurt in part by a sharp rise in the 10-year Treasury yield amid an increasingly hawkish Federal Reserve. But many of the best stocks have rallied nicely off lows after the S&P 500 confirmed the new uptrend on March 16. The Nasdaq Composite followed through two sessions later on March 18. Many of the best tech stocks with high PE ratios like Tesla stock and Nvidia were hit hard earlier this year, along with software stocks like CrowdStrike and Zscaler. A rising interest rate environment isn't good for the best tech stocks um, with high multiples because it makes for a more challenging operating environment. If the stock market senses any possibility of a slowdown in earnings growth from high P and E names, the selling will hit these stocks first. That's what's been happening lately as money flows into the low P&E names in the energy sector and other areas. That's what's been happening lately as money flows into low P&E names in the energy sector and other areas. The stock market tide is flowing positive after follow-through days for the S&P 500 not in March. That means it's important to have a list of the best tech stocks watch at the ready. We got Apple. The best tech stocks by watch now includes Apple, Palo Alto Networks, Arista Networks, Pure Storage. Pure Storage. Automatic data processing. Okay, what are Pure Storage and Pure Storage. Flash-based storage solutions for enterprise clients. Flash-based storage solution. 5 straight quarters of accelerating revenue growth points to strong demand for the company's products. A shares gapped up and soared nearly 13% on March 3rd after the company reported a 177% surge in quarterly profit. Um, Annual operating cash flow doubled to more than $400. CEO Charles Gonzalo said the company is no longer a niche player in the strong market, with strong growth among commercial, enterprise, government, and cloud customers. ADP stock, okay, automatic data processing probably won't come up very often in a search for the best tech stocks, but the stock's technical strength is noteworthy. ADP is tracked in the same industry as Paychex, another strong price performer in the stock market. ADP stock has been working its way higher since its late January earnings report. It's forming the right side of a cut base, but the stock needs to consolidate for a better entry. It could very well happen because patterns like this often yield handle entries. Okay, chart pattern perspective. I don't buy it. Let's go for next article. Okay, fintech stocks look cheap. Why could be time to buy? Hmm. Okay. Let's go through this article. What are the fintech? The fintech and digital payment sector has a new fan at Wells Fargo. Says time to buy them is now. Mm. And Jeff Conway picked up coverage of 14 companies in the group on Tuesday with a bullish stance, which translates to overweight ratings for them all. The companies include high-profile names like Shopify, Block, and PayPal. Other picks include Aiden, Bill.com, Fidelity National Information Services, Fiserv, Flywire, Global Payments, Markuta, Payments Hub Ocean, Toast, Wesh. Combination of 5 themes. Topping his list is digitalization. With increased adoption of digital payments, he also cites modernization as both merchants and consumers seek modern tools that can support their everyday lives. At V stock, what the hell is at V stock? Okay, next. Warren Buffett's first rule about investing. Here's what to do if your financial advisor breaks the rule. Is it time for you to get a new advisor? Warren Buffett once said the first rule of an investment is don't lose. And the second rule of investment is don't forget the first rule. And that's all the rules there are. Of course, your financial advisor isn't always going to be able to follow that rule. The markets to go down, nobody beats the market every time, even Buffett himself. But when they do lose you money, and how do you know when to pull the plug? You can use this tool to get matched with a planner who meets your needs. One good rule of thumb when you see losses in your portfolio, comparing the relative returns of your investment portfolio to a similar target portfolio over the same time period can help you see if your losses are out of line. If you have a portfolio with 60% in stocks and 40% in bonds, compare it to a similar portfolio. Second opinion from another advisor. Some brokerage firms may include a target portfolio as part of their statement, or financial advisor can likely include it in clients' portfolio reviews. Not really helpful. On these 3 buys, Is the bottom and 4 Shopify stock? Harbor stock. Harbor. What is Harbor? Harbor. Has. Hasbro. Lulu. El Polo local stock is not a crazy long. El Polo local stock. Spanish chicken restaurant chain operator El Polo Loco shares has been taken out to the woodshed in 2022. It's a restaurant company, okay. Rambush Inc. Rambush Inc. Rambush Inc. Rambush Inc. The stock has been a major outperformer this year. Compared to more well-known names like AMD and Nvidia, Rambus is a company that creates semiconductors and Internet Protocol products, which include everything from memory and interfaces to security, smart sensors, and lighting. The stock offers investors a great way to take advantage of the growth in the data center space, as the company's memory interface chips help to enable peak performance. Rambus posted strong quarter 4 earnings results last February that included revenue of 45.3 million, up 107.8% year over year, which is a good sign that this small cap company has positive momentum heading into its new fiscal year. And we'll go next one. Metals and mining stocks, tech resources, Vanguard Gold Mines ETF. Okay, we covered all the ones that I invested. And now let's go back to every company's one by one, okay? One company that I want to go over is okay, the first one that I want to go over is Upstart Holdings. Upstart Holdings. Upstart Holdings. And Upstart Holdings. Upstart Holdings. And let's see. Okay, Upstart Holdings. Let's go to Upstart Holdings. Let's go to Upstart Holdings. Upstart Holdings. Wait, hold on. Give me 2 minutes. I'll come right back. Okay. Okay. The one that I'm going to look at first is Upstart Holdings. Let's go to Yahoo Finance and Upstart Holdings. Why Upstart Holdings plummeted 31% in March? Stock sinks as market gains. What you should know? %31% in March. Let's read this article, okay? You're reading a free article. Opinions that may differ from that. The fintech has had a wild rise since it went public just over a year. What happened? Had a rocky month of March as its stock price dropped 31%, according to S&P Global Market Intelligence. The fintech led the S&P 500, which was up 3.6% in March. Upstart is trading at around $115 per share, down about 24% year to date as of April 4th. Upstart Holdings is a consumer finance company that uses artificial intelligence to handle loan requests. Yes. Roughly 70% of its loan requests are fully automated, and about 2/3 are approved instantly through the AI. While it is not a full-service bank, it partners with banks to provide loans. It also allows other banks and credit unions to use its technology platform for a fee. Upstart released the fourth quarter and full year earnings in February. Which showed a 252% revenue gain year over year in quarter four, and a 264% annual revenue gain in 2021 over the previous year. The quarter four gains were driven by a 30% gain. The quarter four gains were driven by a 301% gain in loan originations by bank partners. The young company posted net income of $58.9 million in the most recent quarter, up $1 million year over year. Volume, average volume, days range, market cap. Before March 2nd to March 14th, the stock price plunged from about $157 per share to around $89 per share, a 43% drop. What drove the decline? Uh, Going back a few months, Upstart stock price has dropped dramatically after a meteoric rise to $400 per share in October. It had been highly overvalued, like many growth stocks, due to the 2020 to 2021 run up, only to coming only to come crashing down. So while the price to sales ratio of 12 and the price to earning ratio of 50 have come down to more reasonable levels, new geopolitical and macroeconomic concerns have emerged. Inflation has not subsided, and there are worries of a recession or economic slowdown due to Russia's invasion of Ukraine. But there were a couple of other things that might have confused investors. In February, Upstart announced a stock buyback plan, which is not typical for a young, growing company, as access capital is often used to invest in the company. Also, Wabush Securities downgraded Upstart to sell based on risk of relying on third-party funding in a period of recession or market turmoil and weakening delinquency trends. On the flip side, Upstart is eyeing the auto loan market, which will significantly boost its addressable market and revenue opportunities. It's a stock to keep an eye on over the next few quarters. Agreed. Agreed. Upstart generated 264% revenue growth in 2021, barely tapped into its largest potential segment yet. We live in an era where technology constantly improves the world around us. Some of it is obvious, like the smartphone you might be reading this article on, but some tech operates in the background to make life more convenient without you even knowing it. Some of it is obvious, like the smartphone you might be reading this article on, but some tech operates in the background to make life more convenient without you even knowing it. Offshore Holdings is an artificial intelligence powerhouse that specializes in the latter. It has developed an AI algorithm that is put into play when users apply for a loan from a bank, and in the process, it levels the playing field for applicants. It instantly analyzes over 1,600 data points relating to applicants' accomplishments to deliver a more thorough and complete analysis, as opposed to the more traditional vehicle credit scoring system that considers a much more limited set of data points. Offshore is rapidly expanding into new lending markets that dwarf the potential of its humble beginnings, and it could lead to explosive growth in its stock price. It has developed an AI algorithm that is put into play when users apply for a loan from a bank, and in the process levels the playing field for applicants. Where Upstart's business currently stands. Upstart isn't a lender itself. It earns fees from its banking partners when its algorithm originates a loan for them. Upstart isn't a lender itself. It earns fees from its banking partners when its algorithm originates a loan for them. So the company carries no credit risk. Upstart, therefore, isn't constrained by the same burdensome regulations and capital requirements as most financial institutions. Same burdensome regulations and capital requirements as most financial institutions that should allow it to grow for more quickly. The company initially began originating unsecured personal loans for purposes like holidays, medical procedures, and home renovations, but it has expanded into a much larger automotive loan market and its total addressable market opportunity has ballooned significantly as a result. Offshore purchased software company Prodigy in 2021, yes, which developed a sales platform for car dealerships. Car dealerships. Okay. Offshore saw this as a clear opportunity to meet car buyers where they were. Offshore saw this as a clear opportunity to meet car buyers where they were. It spent several months integrating its loan origination technology with Prodigy's sales software. Several months integrating its loan origination technology with Prodigy sales software, and Offshore Auto Retail was born. Now car dealers can offer finance to customers using the same platform they used to make the sales, and growth is soaring. Now car dealers can offer finance to customers. Car dealers can offer finance to customers using the same platform they used to make the sale, and growth is soaring. In 2021, Offshore delivered $849 million in revenue, blowing away even its own guidance of $500 million at the beginning of the year. $849 million in revenue, blowing away even its own guidance of $500 million at the beginning of the year. It was a dramatic growth acceleration compared to 2020. What's intriguing is that the automotive lending segment hasn't even ramped up yet. In 2022, Offshore expects to generate just $1.5 billion worth of car loan originations. $1.5 billion worth of car loan originations, which would add less than 10% to the company's $11.7 billion of total originations from 2021. It means that there is still a long runway for growth. But it might just be the beginning of an explosive opportunity. Where Offshore could be going. The lending market is broad and diverse. The lending market is broad and diverse. You can borrow money for a wide range of things in both individual and corporate capacities. With unsecured lending and automotive lending, Offshore has only scratched the surface of its potential. The U.S. unsecured and automotive loans market total $823 billion in originations annually. But by adding small business lending and more mortgage lending, the TAM opportunity could grow to $6 trillion. Annual loan market size. Offshore highlighted this in its 2021 full-year earnings presentation, which offers a clue as to where the company might be expanding to next. Mortgage originations will likely be the ultimate long-term goal because of the market's sheer size. Mortgage. But the small business segment is the more logical next step. Regardless of which direction Offshore decides to venture, one thing appears certain: explosive growth potential. Throughout disappointment, but that deserves more time to come good. Question. Deciding what to do with a loss-making position is one of the most challenging aspects of investing. After all, it is difficult to put emotions to one side when a stock is heavily in the red. Investors may naturally fear the potential for further share price falls, and this fear could lead them to sell a loss-making position even when the company's long-term prospects remain sound. Investors may decide to hold on to a stock that has fallen heavily because they wish to avoid the pain of making concrete what is until overall, at the end, offshore holdings is a good one. It's the one that I have to hold on to. I will never enroll sell this stock, and I'm gonna just leave it as it is and wait for the right moment. Okay. Tomorrow, I'll talk about I'll be talking about offshore holdings in detail. Okay, studying companies is really important thing, So okay, I'll see you guys tomorrow again. Okay, bye bye.